Hello, this is Roger Michalski, publisher of Eagle Financial Publications. In the next couple of minutes, I'm going to introduce you to 4 of the richest men in the United States and show you a little-known investing niche that consistently produces triple-digit profits, often in a matter of days. Here are 2 of the rich guys, George Roberts and Henry Kravis, both 69 years old. They're the co-founders and co-CEOs of Kohlberg Kravis Roberts, also known as KKR, one of the world's largest private equity companies. It's probably most famous for the 1988 leveraged buyout of RJR Nabisco. Mr. Kravis is on the right, Roberts on the left. They're cousins. Mr. Kravis was raised in Tulsa, Oklahoma, the son of an oil engineer, while Mr. Roberts was raised in Houston. Both ended up going to college at Claremont McKenna in California, and both started out in business working at Bear Stearns. Today, they are worth about $4.5 billion each. No wonder they're smiling. Why should you care about these 2 rich guys? Well, if you're looking for investments that could double your money without taking huge risks, I have a suggestion. Consider publicly traded private equity companies like KKR and the companies they invest in. I know, sounds like an oxymoron, doesn't it? Publicly traded private equity companies. Well, oxymoron or no, over the last 2 years, select private equity companies have seen their shares beat the market by 2 to 3 times at least. KKR, for example, soared from $11 per share in May of 2012 to $25 in July of 2014, a 126.2% gain in little more than 24 months. Not too bad. Okay, here's another rich guy, Stephen Schwarzman. Mr. Schwarzman is the CEO of the Blackstone Group, another famous private equity company. Unlike many bigwigs on Wall Street, he receives a modest salary of about $350,000 a year. He makes his real money the old-fashioned way, the way investors do, by buying and selling companies. Mr. Schwarzman's dividends from his company's stock earned him $204 million last year, but his net worth is estimated at $10 billion. Not surprisingly, if you had invested in Mr. Schwarzman's company, you'd have done pretty well too. The Blackstone Group has seen its stock skyrocket from $11.54 a share in 2012 to $35 a share in 2014, an impressive 204% gain, again, in just over 2 years. Think about it. You could have made a $10,000 investment in Blackstone, and in about 26 months, walked away with an extra $20,424 in cash. Okay, just one more rich guy, Leon Black, co-founder and CEO of Apollo Global Management, APO. Apollo Global Management is yet another private equity company founded in 1990 that has $159 billion under management. Mr. Black received $125.5 million in compensation and dividends last year, as his combined payout climbed from $77.3 million. But his net worth is around $5.2 billion. Apollo has seen its shares shoot up from around $10 in 2012 to $35 a share in January of 2014. That's a 238.9% total return on your money, and a compounded average annual return of 108% for each of the 2 years in a row. So, allow me to summarize. If 2 years ago you had invested $10,000 in each of these 3 companies, Apollo Global Management, KKR, and Blackstone Group, today you'd be looking at an extra $58,890 sitting in your brokerage account right now. Almost $60,000 in profits. Your $30,000 would have grown into $96,890 in 2 years. So please, give me just a few more minutes of your time. I promise it will be worth it to you. Private equity is a very specialized niche in the market that very few people know about, and even fewer invest in, even though it's a market in which you could make some handsome profits over the next couple of years. In this brief message, I'm going to tell you a little bit more about what private equity actually is and why these companies are able to make so much money so quickly, give you an overview of who the top players are and which companies have performed the best in recent years, and reveal how you can take advantage of the incredible profits these companies generate to give a significant boost to your own portfolio. Private equity stocks give you the potential to turn $50,000 into $1.8 million in 10 years. So let's get started. Private equity is the name given to companies that invest large amounts of their own and other people's money into struggling or startup companies. The most famous example of a private equity company is probably Bain Capital, once led by Mitt Romney. The profits these companies can generate are staggering. For example, one private equity company, Spark Capital, pumped a large amount of money into Twitter during its early years. When the company sold its stake in Twitter, do you know what the return was? 2,820%. It made 28 times its investment in just a few years. Now, most of these private equity companies are, well, private. They raise money privately, mostly from pension funds. But a few of them have gone public, and you can buy their shares just like any other publicly traded stock. Not too many investors know about them, but the ones who do have been able to make piles of cash over the past several years. Take American Capital, ACAS. It sold for just $2.65 a share back in 2010. By November of 2014, it had gone all the way to $15.54 a share. Do the math. A $10,000 investment would have risen to $58,641 less commissions. That's a 486% gain. There have been a lot of other private equity stocks that have made people handsome profits over the past 5 years, including Ares Capital Corporation, which jumped from $3.22 a share in March of 2009 to $16.32 today, a total return of 406.8%. Fortress Investment Group, up 211%. Wendell, Brookfield Asset Management, Aurelius, all of these private equity companies have at least doubled investors' money over 12 to 24 months. Here's my point. Even small stakes in these companies have the potential to set you up for life. That's because many of these companies are not one-shot wonders. Ares Capital Corporation, for example, has earned an average annual compounded return of 32.9% for nearly 6 years running. At that rate, every $50,000 account would grow into $859,448 in just 10 years. On an annual basis, American Capital has done even better, an astonishing 43.4% average annual return over the past 59 months. There's no guarantee, of course, that this will continue. Past performance is no guarantee of future results. But if it did continue, a $50,000 account would grow into $1.8 million in 10 years. Yes, I said $1.8 million. Remember, private equity is how Mitt Romney made his fortune. It's how Leon Black made his $5 billion fortune, and how Steven Schwartzman made his $10 billion. In many cases, it's how the 1% became the 1%. For example, in 2007, the Blackstone Group bought all the shares of Hilton Hotels for $26 billion. For a while, it looked like a stupid investment. Their timing couldn't have been worse. Hilton had been struggling as it was, but then the 2008 crash hit, and hotel visits plunged. But gradually, Hilton Hotels bounced back, and revenues soared as the economy improved. In 2013, Mr. Schwartzman and his fellow investors took Hilton Hotels public again for around $24.80 per share. Their total profit? An estimated $12 billion. $12 billion in profit. Of course, not all private equity companies do as well as Blackstone. It goes without saying that you can't just invest in any old private equity company. According to the Preqin Global Private Equity Report, there are about 873 major private equity funds with total assets of around $454 billion. The performance of all companies in a benchmark private equity index outperformed the S&P 500 by nearly 2 to 1 over the last 10 years. But there is an enormous range between the top companies and the average. Some private equity firms have even lost money in recent years. And that's what brings me to the point of this presentation. My name is Roger Michalski. I'm the publisher here at Eagle Financial Publications. I work closely with Dr. Mark Skousen, who has been editor-in-chief of Forecasts and Strategies, our popular award-winning investment newsletter since 1980. As you probably know, Mark is one of the world's leading economists, an investment expert and university professor, and the author of more than 25 books. He currently holds the Benjamin Franklin Chair of Management at Grantham University and has taught economics and finance at Columbia Business School, Columbia University, Barnard College, Mercy College, and Rollins College. Mark has also been a consultant to IBM, Hutchinson Technology, and other Fortune 500 companies. But here's something you may not know. Over the past several years, Mark has been studying private equity companies intensely, as only a trained economist and investment expert like himself could. He's compiled detailed dossiers on private equity stocks and the companies they invest in that he only occasionally shares with subscribers to his premium investment services. He rarely talks about these stocks in his Forecasts and Strategies newsletter. The reason why is obvious. Private equity companies can make very large bets on struggling companies. They can make tremendous amounts of money very quickly, but they can also face big challenges as well. That's why private equity companies and many of the companies they invest in are not suitable for the portfolios of many ordinary investors. Many of them double, even triple your money, but some go nowhere and even lose money. We've known about Mark's secret dossier of private equity stocks for years. Well, I've known about Mark's top-secret research for many years now. Every once in a while, we'll discuss these companies. Mark regales me with stories about the mega deals some of these private equity companies are putting together, such as when Carlyle, Merrill Lynch, and Clayton, Dubilier & Rice bought Hertz Rental Cars for $15 billion, or when Cerberus Capital Management acquired Albertsons grocery stores for $17.4 billion, or like the time in 2007 when Stephen Schwarzman of Blackstone bought equity office properties for $38.9 billion. Whenever Mark would tell me about these mega deals, I'd find myself wishing we could share them with subscribers to our newsletters. After all, the potential profits of these private equity stocks are often phenomenal. As we saw, they can double, triple, and sometimes even quadruple your money in a matter of months. This is especially true when Mark follows the private equity company leads and recommends that his readers buy shares in the companies the private equity companies are investing in. This can lead to some truly explosive profits. For example, LyondellBasell Industries up 366%, Hertz Rental Cars up 174%, Hospital Corp of America up 290%, Freescale Semiconductor up 206%, and Kinder Morgan up 74%. In addition, there are opportunities for even bigger gains, or at least faster ones. You see, Mark often recommends option plays on these private equity investments, and Mark is one of the most famous options investors in the world. He routinely bags profits of 50%, 100%, 200%, even 500% in a matter of days. In 2014, Mark had even bigger winners, with profits of 121%, 269%, 152%, even 448%. For example, in his various VIP trading services in 2014, Mark's recommendations have resulted in profits of 430.3%, 580%, and 351% in one position, 306% and 498% on another, 152% on a third, 110% on two separate investments, and 121% on another. All these triple-digit profits were booked in 2014, most in a matter of just a few weeks or months. So here's the reason for this message. A while back, I talked Mark into launching a brand new, very private VIP investing service dedicated to private equity investments. That is, publicly traded private equity companies and some specialized vehicles that invest in a number of up-and-coming, little-known private equity companies. We decided that this special service would be very limited in size, just for an exclusive group of knowledgeable investors. We decided to call it the Private Equity Trader. The ground rules would be simple. Mark would reveal to a few hundred serious investors how to invest in private equity stocks and some of the companies the PE companies invest in, but only if they promised not to share the recommendations with anyone else. Mark prepared a model portfolio of recommendations. He then agreed to follow up with this tiny group with weekly emails that included buy and sell recommendations. Here are a couple of recent examples from these communications between Mark and his readers. Private Equity Instant Double Number 1, a classic private equity investment. Based in New York City, this company is a $10.3 billion private equity investment firm specializing in acquisitions, leveraged buyouts, management buyouts, special situations, growth equity, mature, mezzanine, distressed, and middle market investments. Today, it's trading at around $22, and it offers a 7.2% yield. And if you're wondering how this private equity stock has performed since Mark originally recommended it, here's the answer. It was the top-performing stock in 2013, appreciating more than 70%. It also paid out $1.62 in dividends. The main reason it did so well over the past 2 years is because of its aggressive involvement in mergers and acquisitions. The company has an equity position in more than 80 companies. It recently announced a $300 million investment in a major computer company and bid on another company's security systems unit for $1.6 billion. The big institutional investment companies also have large stakes in this stock. For example, Morgan Stanley holds shares worth $797 million, and Lexington Partners 6 Holdings LLC with 4.78% worth $445 million. Make no mistake, this is a classic Wall Street insider investment. Fully 73% of this company's total float is held by either institutions or mutual funds. That's a lot of confidence in this company from Wall Street's big boys, and more than enough reason to consider purchasing shares. This company has already doubled investors' money since the middle of 2012, and I am confident that it's going to double again. Private Equity Instant Double Number 2, a $7.7 billion boutique consulting company firm. One of the world's largest consulting and outsourcing firms, this company has seen its revenues shoot up 10% to $7.78 billion and nearly rise to $1.08 per share. Growth was solid across the board in all 4 of its core businesses. Consulting and operations jumped 15%. Company communications rose 14%. Technology operations advanced 14%. And financial services climbed 10%. What's more, the stock is selling for less than 2 times sales and 15 times expected earnings in 2014 and 15. It has a mouthwatering return on equity, ROE, of more than 54%, and it has virtually no debt. The company's stock just keeps climbing higher and higher. It's averaged 25% a year for the last 5 years straight. Private Equity Instant Double Number 3, a Houston-based PE firm that earns 14% on its loans. Not all private equity companies are based in New York City. One of Mark's favorite recommendations, in fact, is a business development company that makes equity investments and loans money to small and mid-sized companies. This private equity stock, based in Houston, invests primarily in companies based in the southern, south central, and southwestern regions of the United States, but also considers other domestic investment opportunities. It invests between $2 million and $15 million in companies with revenues between $5 million and $300 million, enterprise values between $3 million and $50 million, and EBITDA between $1 million and $10 million. The firm seeks to charge a fixed interest rate between 12% and 14%, payable in cash in the case of its mezzanine loan investments. Think of that. Imagine getting 14% on your money like clockwork. This company is also well diversified and pays its dividend, a whopping 6.3% yield, monthly. Management also continues to accumulate more shares of its own stock into 2015. At the end of June 2014, 12 company insiders made 14 share purchases at market value. That kind of insider buying affirms my confidence in the company's outlook. The management team's interests are clearly aligned with shareholders. The company's management team and directors own more than 9% of the company. Last year, the CEO earned roughly $2.5 million in dividends alone on his holdings. That's 5 times more than his paycheck. It is rare to find a stock with high yield, growing dividend, a very solid management team, insider buying, and bright prospects for the future. But that favorable situation is exactly what this private equity opportunity offers. The company has already doubled early investors' money, and Mark believes it will be another double over the coming months. Private equity investment number 4. Private equity for nervous investors. Now, if you're nervous about investing in one or two of the big private equity players, there is a way you can still get in on the private equity profits and still diversify as well. There is a specialized investment vehicle that pools money from investors for several dozen of the smaller private equity firms. This is not a mutual fund. It's another type of investment that lets you share in the dividends the companies pay out, a whopping 11% a year, while also taking advantage of the capital gains of the private equity firms as well. This is a realistic, low-risk way you can reap some of the profits from companies like Onyx, Britain's 3i Ord, even KKR. How well has this investment done? Well, because its assets are spread among a number of different private equity firms, you don't get the fast doubles like some of the other private equity investments. But since March of 2009, this specialized pool of funds has handed investors a compound annualized return of 20.6%. If you had invested $50,000 in this private equity investment a few years ago, today your account would be worth $145,500. This investment vehicle generally invests at least 90% of its total assets in private equity companies. This is a great way for investors to participate in what was once reserved for the ultra-rich and institutional investors, such as Mitt Romney and his Bain Capital. Now, many people would like to gain access to Mark's recommendations for these private equity stocks and the companies they invest in, but we simply can't just offer these picks to all of Mark's subscribers. For one thing, these are not suitable to the average investor. While many have triple-digit winners over the past several years, some have ended up losers. Also, it goes without saying that, especially with options, you should only invest with money you can afford to lose. These investments also require more monitoring than some of Mark's other picks. After some time thinking about it, however, we've decided to agree to a compromise. Mark agreed to create this brand new elite trading service geared for these private equity stocks and options, but he's going to limit it to just 800 new subscribers per year. That's right, just 800 people. There's a good reason for this. We want to make absolutely certain you can execute every single recommendation Mark gives you at a reasonable price level. The truth is, Mark sometimes spots undiscovered call options for as little as 25 cents each, sometimes for as little as a nickel each. This is where the big money lies hidden. Limiting the membership is the only way we can make sure Mark's subscribers are able to get in on these kinds of underpriced option investments. What you get when you join Dr. Mark Skousen's Private Equity Trader. So what is the Private Equity Trader? As I said, it's an elite VIP service for serious investors who like the idea of doubling their money, at a minimum, on select private equity stocks, the companies private equities invest in themselves, and options. Mark gives you precise, unambiguous, actionable trading advice. He does all the necessary homework to make sure his recommendations are actionable. On each and every email alert, Mark tells you exactly what to buy, what to pay for each private equity investment, and how to limit your risk, for example, through the use of stop prices. The first thing you get is Mark's brand new special report detailing everything you need to know about private equity investing. The Private Equity Investor Guide. This plain-speaking, no-nonsense guide will quickly help you to understand why private equity companies followed by Mark offer realistic opportunities to earn triple-digit profits over the coming months and years. Companies like the $10.3 billion private equity investment in New York that made investors a 70% gain in 2013 and is on track to do even better in 2015. The $4.1 billion boutique PE firm that saw its shares skyrocket more than 200% since 2012. The specialized investment vehicle that pools money from investors for several dozen of the smaller private equity firms. A Houston business development company that has already doubled early investors' money since 2010. And lots more. In addition to the Private Equity Investor Guide, if you subscribe now to Private Equity Trader, you'll be welcomed as a charter member and receive the following serious money-making benefits. 52 weekly issues of Private Equity Trader alerts. Each contains detailed trading recommendations conveniently delivered to your inbox. The alerts tell you precisely what to do and when to do it. There are no ambiguities, no ifs, ands, or buts typical of so many trading advisors. The alerts always go out by email because the instantaneous communication is essential for good fills in these fast-moving markets. Ongoing new recommendations. In addition to the current portfolio and the Private Equity Investor Guide, you also get ongoing new trading recommendations. Mark typically offers 1 or 2 new trades every other week, or about 50 recommendations a year by email. Risk minimizing sell prices. Mark gives you specific instructions for placing sell stops on all of his recommendations, and he follows up by constantly updating his stop price recommendations. This allows you to lock in any unrealized profits while also limiting losses in the event of a sudden reversal. You always know how much money you have at risk, and you'll also know exactly when to get out if necessary. Profit-taking alerts. When Mark exits a profitable trade, he normally closes out the position in stages, particularly with options. For example, if Mark has a private equity option that has soared over the past few weeks, he'll recommend you sell half or sometimes even a quarter of your position at that time, then sell another quarter. Sometimes the profits keep climbing and you make a lot more money this way. 24/7 access to encrypted website. You'll have instant online access to all of Mark's current advice, plus archives of back issues and special reports through his exclusive subscribers-only website. A chance to meet Mark in person. Exclusive access to invitation-only private meetings with Mark at the Money Show event held several times a year around the globe. A special bonus. A copy of Mark's Little Black Book of Options Secrets. While you certainly know that options can generate big profits, options trading success depends on your understanding of each trade. That's why, as a charter member of Private Equity Trader, we'll give you a free copy of Mark's Little Black Book of Options Secrets. The secret is how options are made almost effortless with Mark's method. By becoming a charter member today, you'll be eligible for all of the benefits above and more. And because you're receiving this email, that means you're eligible for a special charter member discount. Lock in the highly discounted charter membership rate today. The price for all of this, including the specific instructions for option plays on private equity companies, is normally $1,995 a year, but you don't have to pay anything close to that, at least not if you take advantage of this special offer today. If you agree to test drive Mark's Private Equity Trader today on a strictly provisional basis, you'll get a very special deal. You lock in half off and pay just $9.95 for a full year of Mark's top private equity picks if you decide to continue. That works out to be only $83 per month, or just $17.76 a week. That's actually a spectacular deal, and it won't last long, given the exclusivity of this group. And considering you could easily recoup the total cost with just one of the investment recommendations. Test drive Mark's Private Equity Trader risk-free for the next 60 days. Now again, I know this service isn't for everyone, but to make your decision as easy as possible, we're willing to offer this special guarantee. If Private Equity Trader doesn't earn you at least double the price of your subscription within the first 60 days, in other words, a $2,000 profit, you can get back every penny you paid for your subscription. That's right. If the recommendations you get don't immediately pay for themselves and make you an extra $1,000 within 60 days, you'll get a full refund of your subscription. If you decide the Private Equity Trader is not for you, for any reason, just let us know at the end of the 60-day trial period, and we'll refund 100% of your money, no questions asked. And if you ever decide Private Equity Trader is not for you, we will refund the balance of your subscription with no hassles. There is just one caveat. You have to act fast. Right now, we're sending this offer just to Mark's most valued subscribers, people who are already familiar with his services. But soon, we will also be sending this same invitation to hundreds of thousands of investors who subscribe to other investment newsletters or who have recently expressed an interest in option trading. I honestly believe this new service will sell out quickly. If all 800 available slots are not taken by Mark's own subscribers, they will certainly be grabbed by these other investors. And once those last slots are taken for the year, that's it. You'll have to wait until someone leaves the program before you can get in, while the lucky few who got in will have the chance to scoop up profits like the 122% gains you could have made in November of 2014 on one private equity trader recommendation. Of course, we'll create a waiting list, but that will be on a first-come, first-served basis. Also, once the 800 new charter memberships have been taken, the one-year subscription rate will move back up to $19.95 a year, even for people on the waiting list. So please, don't delay. The private equity investments Mark has recommended to his subscribers have handed subscribers profits fast. One private equity trader investment he recommended last year more than doubled subscribers' money, up 111.4%. Another soared 57.7% in just 9 days. Still another shot up 70.9% after Mark recommended it. I believe the profits on these private equity investments will become even more substantial in the year ahead, and they'll often pay off in a very short period of time. Some of Mark's biggest winners, such as the 448% gain subscribers to one of his trading services made in May, came in less than 60 days. That win could have more than quadrupled your money in just 2 months, turning every $5,000 into $27,400. So act now. Click on the link below and accept a zero-risk test drive of the Private Equity Trader. Remember, these investments are designed to earn you triple-digit profits quickly. In the case of the options, usually in a matter of a few weeks. With the money-back guarantee, you have nothing to lose and potentially a lot to gain. Click on the link now and give it a try. You'll be very glad you did. This is Roger Michalski. Thank you for listening. Click on the Subscribe Now button and get instant access to Private Equity Trader's triple-digit picks right now. P.S. Remember, as a charter member, you can join Mark for a full 50% off the regular price of $19.95 a year. You pay only $9.95, with an ironclad 60-day money-back guarantee. Call 1-866-482-7689 right now to test drive his Private Equity Trader service on a strictly provisional basis. But once all 800 available slots are filled, that's it. You'll have to wait until an opening is available, and then likely pay double the special charter subscription. Given the volatility we've seen in the market recently, I honestly think you'll pay for your subscription before the 60-day trial period is over.